Yo, what's up guys? It's your boy Looney. Today we're breaking down whether selling options with just $1,000 is even worth doing. We're going to use Oscar and possibly Tesla leverage ETF as examples. And this is a realistic look at a small account trading. There's going to be no fluff, no fake sort of idea of turning $100 into a Lambo kind of story. Before we get into it, quick shout out to the Discord. It is free to join, and then I also offer a premium membership. It's $8 a month, and that gives you access to one-on-one coaching. I do trade callouts. I have an option selling course and more like giveaways. You can check it out. All the links to that are in the description. But let's look at Oscar and go over why I choose Oscar. And I'm focusing on Oscar. The ticker is OSCR. It's a health insurance company. It has been hit pretty hard. The entire health industry has been hit hard recently. And I just feel it's a good opportunity. There are going to be other opportunities at similar prices, but this is mine for now. So we're going to use this as an example. And the stock is trading right around that $14 mark. So you can sell options below this, and you only need around $1,000 or $1,400, somewhere in between that, to sell a cash secured put. And this is a lot lower than something like Nvidia or Tesla, where those require thousands of dollars, $10,000 minimum, just to even play with options. So if you're on a budget or just starting out, Oscar or a similar stock at this price is a great option to learn how to generate passive income without needing a huge portfolio. Now, this isn't financial advice, so this is just, I guess, my opinion and what I'm doing. So just follow my journey, and we're gonna go over how it works. So let's say I sell a $12 put, which I already do. So let's look at this open trade. And that means that I'm agreeing to buy 100 shares of Oscar at $12. And for that agreement, for locking up that cash, because you need $1,200 to do this sort of trade, because it's $12 times 100. When you're dealing with options, you're always dealing with 100 shares. And to do this agreement for a set period, that's the expiration. I think I did about a month. We're about halfway through. And to do this sort of trade, you get paid up front. You get paid this premium, and that's the $60. And right now, it is halfway there. So if you guys don't know, when selling cash secured put, time is on your side. And therefore, it is up $30. If I were to buy to close, because that's how you close this sort of trade, it would be right around $30. And therefore, to open the trade, I got paid $60, and to buy to close is $30. So I'd make a gain of $30. But in my eyes, I'm just going to let this play out, let this go through expiration, or at least get closer to expiration, because that's how you sort of earn that full premium. That's how you earn that $60 of full premium, because although it goes into your buying power, you don't net realize a gain of $60 until the trade is over. And you can do this sort of similar trade now with about a month expiration, and you can look at the $12, the $11, somewhere around there. You get paid this premium on the right, that $50 or $35, somewhere around there, lower delta. But let's say Oscar drops below $12, because this is where things get a little bit interesting. Because I went over what happens when Oscar stays above $12. You get that $60 net gain, and you also get that cash back. You get that $1,200 cash collateral back into your account. But if you get assigned, and assigned means that the stock ends up trading below the strike price, so under $12, you'll be forced to buy 100 shares at that $12. And although it doesn't seem like an ideal trade, you still get paid that $60. So, and essentially, you're not paying $12 per share, you're paying $11.40 per share. And that's this break-even price, because you got to take into account that $60 premium. But when you do get assigned, you won't see that premium calculated into your cost basis, because it goes to your buying power, not into Oscar itself. But I'm okay with owning Oscar at $12 a share. And once you own the share, you could actually do more trades. You could do covered calls, which it works similar. Instead of needing cash, you need the shares to actually do the trade. So is this strategy worth it? And I would argue yes. If you're okay with slow and steady gains, this is a great strategy. You're not going to 10x overnight, but you're going to build good habits, earn passive income, and possibly own shares of a solid company. Because like I said, once you own these shares, and I'll probably get assigned to this $15, I could sell covered calls, and it's very similar. You're earning passive income and just by owning the shares. But there are some few things you need to keep in mind. Because like I said, you do need the full collateral ready. You need $1,200 to do the trade I just showed you. And although it's not $10,000, $1,200 isn't nothing. And I wouldn't be looking at stocks that are trading at that $4 or $5 because you'll need $500. But also, stocks that are trading at that range aren't really the best stocks, if I'm being honest. So I'd be looking at somewhere around $10 to $15 if you're a beginner and you want a discounted type of stock. And that's why I did TSSL or TSLL as another trade. I opened this one $9, only needing 900, and this is a leverage position with Tesla. So that's a good alternative as well. And yeah, it's not a cheap trade. And also you could get a sign during a dip. A lot of people say they're okay with holding the stock at the prices that they choose, at these strike prices. But in reality, your emotions play against you. So when the stock drops significantly, a part of you thinks, I don't want to own this stock anymore. I want to panic sell. And when selling cash secured puts, you need to know that this is the price that you're okay with owning it. And that's what I'm doing myself. And not only that, I am dollar cost averaging. So I'm okay with owning it at $15, but I'm also okay with owning it at $12, $11, or $10. So you need to be okay with the stock possibly dipping. Every stock goes through its ups and downs. And it takes a lot of emotion to realize that. To realize that you're not always going to be perfect. The stock will drop some days, and you just need to be able to be patient and just hold it. So at the end of the day, I'm doing this with Oscar, and you saw with TSSL. And it's how I learned option sellings. When I didn't have much to work with, I started small, this is $1,000, and now I'm doing more trades. You saw I have 4 option trades for that one position. And if you're tired of waiting to have a big account to actually needing to invest, this is one of the few real ways to start small and still make progress. And I just want to quickly, this video is kind of over with that. I also had Figma. This one was a IPO that happened today. A lot of people only got 1 share. It was a pretty common thing. I ended up selling it, made $100 profit, or I think a $70 profit. I'm okay with that. Would have been nice. I put in an order for 100 shares, and unfortunately only 1 of them filled. And yeah, this is a good play. If you had $1,000, maybe you could have turned that into $7,000 or $5,000. So there are ways to make money big, but the selling options is a very safe and consistent strategy. So smash that like button, leave a comment if you're tired or you tried selling options under 1,000, and check the Discord if you want to follow my trades in real time. Peace.